Hello, welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going into our weekly numbers for our Shield portfolio. This will be week 56, and this will be on August 16th, 2025, which is a Saturday. So we're going to, as always, go into our weekly numbers. So we have our Weapons of Finance, which is our overall strategy. This is the Shield part of the strategy. Portfolio. This is our primary portfolio. This is a defensive strategy focused on preserving and protecting wealth, continuous and stable returns, using balanced diversification for global economic resilience and dynamic management. This is kind of just an overview, kind of how we look at the strategy for this Shield portfolio. So we have our portfolio's net worth currently at $696.43. We have a all-time gain of $53.32 with a money weighted return of 15.01% for the 56 weeks. We have our weekly data for week 56. So this is as of August 8th, 2025 until today, August 16th, 2025. We have no net cash flow. Excuse me. We have a market gain or loss of minus $4.58. And we have no dividends earned. So that's for a total loss of minus $4.58. That gives us a money weighted return of negative 0.65%. This is our weekly data. And then for monthly data for week 56 is from July 15th, 2025 till today, August 16th, 2025. We have a net cash flow of $60.95. So it's two $30 deposits. One back here on July 16th and one here on August 6th. So you see a stair-step pattern. We have a market gain of $3.86. We have a dividend earned of 31 cents, which gives us a total gain of $4.17. So we have a money weighted return for the month of positive 0.62% for week 56. And we have our quarterly data for week 56. This is back to May 15th, 2025. Till today, August 16th, 2025. We have net cash flow of $121.82. So there's going to be four $30 deposits where we see the stair steps, one here, one here, one here, one here. So that's just the cash getting added to the account. Over that 3-month period, we have a market gain of $18.38. And we have dividend earned of $1.12, which gives us a total gain of $19.50. And over that time period, we have a money weighted return of positive 3.19%. That's our quarterly data. Then we have our yearly data. So this goes back a full year to August 15th, 2024 till today, August 16th, 2025. So we have a net cash flow of $517.01. So every stair step, you see a $30 deposit over that year. So we're dollar cost averaging every 3 weeks. Over that time period, we have a total gain of $53.63. And we have a market gain of $50.59 plus a dividend of $3.04, which gives us $53.63. And then we have a money weighted return of positive 14.29%. So this is our 1-year performance. So I say a lot, the operational performance for this portfolio, I want it to be between 5 and 10%. And then the optimal performance is anything above 10%. So we're above 10%, we're at 14.29. So we're doing great on the portfolio right now. And then we have our all-time data. So this is since portfolio inception. This goes back to July 19th, 2024, when we first started the portfolio. Over that time, we have a net cash flow of $646.50. So we have our initial $100 deposit opening the account, then every third week, $30 deposit. Over that time period, we have a market gain of $49.93. We have dividend earned of $3.39, which gives us a total gain of $53.32. That gives us a money-weighted return of 15.01%. So we're at 15% for the all-time. We're doing good so far. Then we have our weekly percentages for week 56. So on the right, we have our target weighting for our asset classes. We have our gold at 45% with our GLD ETF. We have commodities at 15% with our USCI ETF. We have bonds at 15% with our GOVI ETF. We have stocks at 10% with our RSP ETF. We have US dollar at 10% with our UUP ETF. We have Bitcoin at 5% with our IBIT ETF. So these are our target weightings. And here's our percentage changes. So for our weekly percentage changes for week 56, gold is down 1.80% for market loss of $5.70. Commodities are up 0.70% for market gain of 73 cents. Bonds are down 0.58% for market loss of 61 cents. Stocks are up 1.52% for market gain of $1.06. US dollars down 0.33% for market loss of 23 cents. Bitcoin's up 0.48% for market gain of 17 cents. This is our weekly numbers for week 56, so going back to August 8th. Then we have our monthly percentages for week 56. So this goes back a full month to July 15th. My mind blanked out. We have gold for the past 30 days, up 0.20% for a market gain of 59 cents. We have commodities up 0.55% for a market gain of 56 cents. We have bonds up 1.66% for a market gain of $1.66. We have stocks up 2.13% for a market gain of $1.43. We have US dollar down 0.39% for market loss of 26 cents. We have Bitcoin up 0.55% for market gain of 19 cents. So this is our monthly percentages. So our numbers for the past 30 days for week 56. And we have the quarterly percentages for week 56. So this goes back to May 15th, June, July, August. Yeah, May 15th. So past 3 months. So gold over the past 90 days is up 2.97% for a market gain of $8.14. Commodities up 4.06% for a market gain of $3.71. Bonds up 1.78% for a market gain of $1.65. Stocks up 4.85% for a market gain of $2.98. US dollar down 1.49% for market gain or market loss of 94 cents. And Bitcoin up 13.36% for market gain of $3.96. So these are the last 90 days for the portfolio, quarterly returns. Now our yearly returns. So the bonds and the Bitcoin ETFs won't have a full year's worth of data, just FYI, that they were swapped out at different times. Gold over that year is up 27.66% for a market gain of $35.67. Commodities up 17.45% for a market gain of $10.13. Bonds will not have a full year of data. Stocks up 5% for a market gain of $2.47. US dollar down 9.26% for a market loss of $5.47. So the dollar is still shit. And Bitcoin, we don't have a full year of data, but it is up 90.55% for a market gain of $12.62. So quite a lot for Bitcoin. And then our all-time percentages for week 56. So this goes back to portfolio inception. We got gold up 30.15% for a market gain of $36.34. Commodities up 17.36% for a market gain of $9.63. Again, bonds don't have full data for it. Stocks up 5.52% for a market gain of $2.57. US dollar down 9.95% for market loss of $5.63. Why are we still early? And Bitcoin up 90.55% for market gain of $12.62. So those are all-time percentages. Here's our portfolio changes. So I have not had any changes since April 30th. I made mention multiple times every week that I'm going to possibly change gold, but I've yet to change it. It's just been going sideways. I haven't really lost or gained anything. So I have no portfolio transactions this week. We have our Illuvium staking dashboard for week 56. So we have a current ILV price of $17.19. We have currently 24.29 ILV staked, which gives us a total market value of $417.58. We have our vesting. We have 3 pages worth. So we have our very first vest with we can withdraw, and coming up in 8 days we have our second one, and basically once a month, every month now going forward, one of these vests will unlock because now we're past the full year. So we have the second page of our vesting and the third page. So the most recent vest was July 29th, so at the end of last month, which means likely I will add another vest at the end of this month, August. And then we have our revenue distribution, no new revenue distribution. We have our 3 original claims of 0.024 ILV, which have a current market value of 41 cents. And no Illuvium transactions. And that is it for our weekly numbers. So now we go into the charts. So gold, starting with gold, always starting with gold. Going back to October 2023, strong uptrend. Show this every week. Broke out, hit this red line, tapped it 1, 2, 3, 4, 5 times. So struggling at this line right here. And you see the gold kind of fell back a little bit into this green uptrend. So it kind of came back once, spiked up. Now it came back again. So gold's been pulling back a little bit. That's why it's down a little bit this week. So still 45% into gold. Maybe if it breaks below this number right here, it's 292. What would that be on gold's chart? So that would be, maybe if it breaks 3,200, somewhere between 3,100 to 3,200 around that price, maybe I might reduce. We'll see. In the meantime, gold's still the dominant player in my portfolio. Next is commodities. So these have been doing still relatively good. On a 5-year, going back to the beginning of COVID, commodities just have been up and to the right. There's these two trends. There's a slower trend here. I don't know why I did that. I like that better. There's a slower trend where it was chopping around, up and down, up and down, up and down. And then around January of 2025, it popped up into this upper trend line now. So now it's in this upper trend channel. And it's still kind of in there. So commodities are still going up. Still doing pretty good, but not too great. Gold and commodities have done the best in my portfolio, so keep them at higher percentages. And then bonds, of course, bonds pulled back a smidge, a little bit right here, smidge. Of course, on a 5-year, going back again to the beginning of the COVID pandemic, bonds have just been going down. But it's been bouncing, 5-year. It's been bouncing up and down, up and down. So it bounced and around this lower trend line, and it's starting to come back down right now. So we're just going to wait to see what happens with bonds. Still keeping at 15%. And then 10-year yield. I think it's been coming down, although it's back up now. It's 432. Yeah, see, it's been God damn it, stupid freaking chart. There we go. Do it like that. So just chopping around, kind of hit the same thing with this green line here. It tapped it 1, 2, 3, 4 times pretty much, and it just hit resistance coming down. So it looks like the yield's coming down, but now it's starting to come back up. So that's why my bonds started to come back down. So we're just waiting and watching to see what happens with the yield. If it goes down, then my bonds can go up, and that would be great. That might increase my position. US dollar still following down along this red trend line here. So still down. You saw in the numbers, you know, it's like down 10% or more, or right around 10%. It's just been doing horrible. If we look at the DXY, so it's been, well, we have this long trend to show this first, going back to March 2008. It's been going up and down in this long trend. Then around this 100 line, it's kind of bounced around it. Now it's kind of bouncing between the lower trend, the green trend line, and then the 100 line. So it's bouncing around it. So it started to come up off of it, but now I see it's coming back down. So dollar's still not doing that great. Very weak dollar environment. We have our equal weight S&P 500. So it's been trying to creep back up into this trend line. See how far back this goes. So this goes back to September of 2022. So we fell out of it once, fell out of it twice, and now we're trying to get back up into it. So this has just been the long-term trend for stocks. We're trying to see what happens. And then Bitcoin kind of been planing here since July last month. Kind of just doesn't, like, it'll hit an all-time high, then it'll come back. It'll hit an all-time high, then it'll come back. So right around that 120. So there we go. So you see this historical line. Every time we've had the peak of the bull market, it's pretty much came across this line. And now it started to break up of this red trend, but it's hitting against this 120. So 120,000 Bitcoin price. So we're just waiting to see what happens with it. I don't really have news as to why it's going up, but you know, it's a speculation asset, so who knows, we'll see. But anyways, that was our weekly numbers for the Shield portfolio. So as always, I should start doing this more often. This is our primary portfolio, so we're the most focused on it. It's a defensive strategy, so it's more focused on preserving and protecting wealth, you know, not being aggressive. We want continuous and stable returns, you know, that consistency. Balanced diversification, you know, using gold, bonds, commodities, stocks, different assets. Right? Global economic resilience. So whatever's going on in the world, you know, I don't fucking care. You know, I need to manage this portfolio so it can kind of mitigate whatever kind of craziness is happening. And then the dynamic management is whenever something is happening, I can move my assets around, which is where you see the there it is. You see the position changes in the portfolio. So this is the dynamic management. Whenever something happens, you know, I can change money, move it around. But anyway, that will be it for our weekly numbers. So as always, thank you for watching. If you have any questions, comments, or criticisms, let me know. Have a good day.